I saw a post from someone complaining that they invested in Dlocal and in 1 year the stock went nowhere. You know what I'm going to tell you about this, that 1 year is too little to know the performance of an investment. But of course that person is right about something, that in that 1 year there has been a lot of volatilities. The stock went up quite a bit, then went down, and now went up again and down again. So there has been a lot of volatilities, and even if we look at the last 3-4 years, the stock has gone nowhere. But if we look at the fundamentals of the company, the TPV increased by over 70%, the total payment volume, in that 1 year. And even with lower take rates, the gross profit of the company has been going up, and now we are at record numbers. There is one thing that we have to understand about Dlocal, and this has been mentioned by the management a lot. Even the CEO, Pedro Art, I have heard him say that in numerous interviews, that they exist because of volatilities. If it was easy, as in the West, as in the developed world, to do online transactions, Dlocal would not have had to exist. They exist because they are involved in emerging markets. And in emerging markets, there are so many volatilities that they have to deal with. And this is why they exist, and this is their function. Instead of, let's say, the big merchants, Uber, Booking Holdings, all these companies, having to deal with all these volatilities, they are handled by Dlocal. And of course, Dlocal is going to take a good cut out of that. This is the work they are adding. This is their contribution. It is not as something as simple as, let's say, Visa. I'm not calling it simple, but it is less volatile compared to what is Dlocal doing. So we can expect the take rate from Dlocal to be higher than Visa. Of course, it is going to go down over the long term because their merchants are moving into more markets. The volume is increasing. If volume is increasing, of course, the merchants are going to get better deals. So take rate is going to go down. One of the reasons why the results were not so good for the last quarter was because of advancement to collection entities. It had an effect on working capital and consequently on free cash flow. So lower free cash flow for that quarter, but this is coming in the coming quarters according to the management. So in order for them to operate, they need these partners in the local markets. And let's say, for example, Brazil. I don't know if this is the exact thing that happened, but in Brazil, buy now, pay later is very common. And people are now able to use that to shop with global merchants. Let's say they are booking a hotel and they are using buy now, pay later. So instead of paying in one go, they will pay in 4 installments. But the global merchant, in that case Booking Holdings, they want the money now. So Dlocal has to make an advance, and Dlocal doesn't take credit risk. The only risk Dlocal has is if one of the collection entities that they partner with goes bankrupt. This is a credit risk. But apart from that, they don't take any consumer credit risk. That doesn't mean that Dlocal will always be behind, that they always have to do the advancement. Sometimes they will have to do it. They will have to pre-fund these accounts to make the money move as rapidly as possible. This is the same thing that Wise does. Rapidly does the same thing, but of course these are different businesses. They have to pre-fund accounts. But because of Dlocal, the way the company operates with the amount of money and the accounting and all, it shows on the working capital more profoundly than, let's say, Wise. And this is not the last volatility that Dlocal is going to face. In some countries, for example, Argentina, a few years ago, there have been currency restrictions. Dlocal was unable to move US dollars out of the country. The big merchants, they want their money. And they don't want to deal with the currency crisis in Argentina. This is not their duty. They have other things to do. Uber doesn't want to deal with that. Dlocal found a workaround. They bought government bonds in Argentina using Argentine pesos. And then these bonds are traded also in USD. They were able to do the transfer and send the USD. This is a workaround that many companies do, but financial companies, not companies like Uber or Booking Holdings or Amazon. This is a risk that Dlocal is taking, and of course, they have to charge the merchants for that. There are also political risks in emerging markets. Something might go wrong somewhere. There might be a civil war, there might be a currency devaluation, an invasion. Who knows what is going to happen? So there are all these risks, and Dlocal, they are here to handle the situation for the merchants. Eventually, we should expect, and this is the direction where it seems they are going, they will give more value added services to the merchant. So it's not just about being a processor, because when you're a processor, it can be commoditized. And as you know, Dlocal is growing, and the more volume they are processing for a merchant, the lower the take rate is going to be. So it seems that they are going to be commoditized. There's many competition. In the West, there's Stripe and Adyen, but in emerging markets, there are many competitors. In Egypt, a few years ago, Dlocal lost one of the big merchants because of redundance. The merchants said that we don't need 3 different processors, let's do only one, and unfortunately that was not Dlocal, that was a competitor. In Asia, there is a lot of competition. What Dlocal brings differently compared to all these competitors is that they are global, and it's one account. You sign up with Dlocal, they are going to give you the option to eventually connect to new countries, new payment systems. So if let's say a company is already working with Dlocal in one country, eventually they may say, okay, let's use Dlocal in another country. So next time there's redundance, it's not Dlocal that is going to lose the account, it's the competition. This is one of the things that Dlocal gives differently, and eventually, like I said, they may go into more value-added services. One of the merchants asked Dlocal to provide physical store payment processing. This is not something Dlocal did before, but they are doing that for only one merchant so far. And the merchant has to pay, because when you go physical, there's additional costs. They are not really dealing with making or selling the hardware, but they have to hire people to do all of this. There's additional cost. The merchants have to compensate them. There's a reason why the merchant chose them to do that instead of going with a local physical processor, because they already have an account with Dlocal. They know they can trust Dlocal, what they are doing. They already are handling things well. So why not go with them and ask them to do this additional work? So when you're investing in Dlocal, I bought it last year, and I'm a little profitable on this, but it has been volatile a lot. I bought more shares when the stock fell down recently, and I will probably buy more. But this is a long-term bet. It's a long-term bet on emerging markets. These countries are going to grow, their economies are going to grow, their population are going to grow, more people are going to go online, more people are going to shop online, people are becoming richer in these countries. So this is a bet on the emerging markets in general. I'm not betting on a single country. There's going to be something bad going in a single country in a few years. It's going to affect the stock price of Dlocal, but I'm not worried about that. This is the long-term bet on Dlocal in the overall market, and there's a lot of market share they can gain. I would say that it is as safe as wise. If we are comparing fintech companies, it is riskier. There's more risk with Dlocal, but the growth is bigger. It's not going to be a big position as wise. A smaller one's around 10% of my portfolio, but still a good position to have, a good bet to have on Dlocal. If you want to know why I have 30% of my portfolio in Wise, I would recommend you watch this video next. Have a nice day and goodbye.